Good day to you, my friends. It is Thursday, January 7th, 2020, and your cherry bomb trade is in for today. And we probably should acknowledge yesterday was a little bit of a disappointing day yesterday, a sad day for us here in the States. I'm guessing probably the world knows about what happened yesterday. And, surprisingly, the market did not react too much to it. So, I don't know. Did you find that a little surprising too? So there's a lot of surprising happened yesterday here. So with that, do know that today's trade is another 50-50 long call vertical, but this time it's in Disney. You could be bullish on it because that's what we're looking at, or you could be bearish on it. We'll see when we take a look at the charts. But to know this, Disney has a liquidity rank of 4 out of 4 and an IV rank of 19, which does set it up for debit spreads today. But I wonder, when we take a look at the charts, what are you going to prefer, a bullish or a bearish position? Because we'll take a look at both. But we don't have too much time to waste because I got to get to work, right? So let's hop on in to our simulated trading platform and allow me to introduce myself. My name is Neil and this is Option Theory, and I want to thank you so much for watching today's video. I do appreciate all of your views, and if you stick around to the end, I'm going to give you a thumbs up. And I do appreciate when you watch my videos to the end. It does help me out. So if you're new to this channel, head on down to the description. You can sign up for the Tasty Trades email blast. It's not mine. It's a bit.ly link. Go click on it and you can sign up if you'd like to receive their email 5 days a week. 4 days contain trades, and we put these into the portfolio that you're seeing here on this screen. So yesterday's trade was a Google trade, at which point we had a bit of a gap down. I don't know if you noticed that one yesterday, and it did gap down and it did rally back up a little bit, but I wasn't able to get to it till a lunch break, and I did get it on. I wanted to show you the position that I did get on. I did go with a long call vertical, and I am long the 1725 and short the 1730. And I did a $5 wide rather than a $10 wide. There was a little bit too much risk in that one for me. I've been finding that my debit spreads, even though they're 50-50, they don't seem to be working out for me right now, so I'm taking a smaller position on that one. And that's, illustrates that whole, hey, you have to size it right for your risk tolerance. Okay. So with that, now you know the position that I have on there. I want to take a look at the chart for Disney. Right? That's not the chart though, but there it is. Disney has definitely been going like, you could call that up. I think you're pretty safe to call that up. Gaps. And oftentimes I would say when things gap, they come back down. Hey, here it did, it gapped and it worked its way back down a little bit, right? To here. Not here. However, if I pull us up where I have some different charts over in Tastyworks, and you'll see here that I promised I did have the chart up. I noticed yesterday, I don't know how this happened, but my charts were all sorts of wonky in the minutes and whatnot. So now I'm back to where I want, a year and a day. So now we're looking at Disney here, and we can see, I feel like we're in a bearish land. But do note that, hey, this is a bearish signal right here. Right? This is not bearish, but being at this upper line is bearish, being at this upper line is bearish, and it shrugged it right off. But I don't know, I feel like we're starting to round over here. So let's take a look at two different trades here. We're going to look at a long call vertical, the one that we got in the email, and we'll take a look at a long put vertical. And I'd love it if you could leave me a comment and let me know what you think of the positions and which one you would take. All right, so let's go back to ThinkOrSwim and head over to this Analyze tab, go to Add Simulated Trade. We're going to be in the February monthlies. Disney does have earnings in February 2nd, I think it is. It says it in the email. So we're at 43 days to expiration, which is really close to that sweet spot for the Tasty Trade mechanics. We're going to come down here and we're looking at the 175, 180 strikes. Now, that's according to the email that we got, but it looks like it's setting up a little different here in ThinkOrSwim, where based on where this at the money is, and it's looking at 180, you could say that this would be the one that you should buy, and this should be the one that you sell. And yeah, that might be something worth looking at. You're going to have lower probabilities on that one. So let's take a look at the trade exactly as it was sent to us here. So the 175 buy and sell the 180. We're looking at a $2.60 debit for this trade. And now that we see here, we have one contract as our default. Yours may be 10. Be careful of that. Come over to the risk profile, and now we're going to take a look at our probabilities for this trade. First things first is I set my date to expiration over here, 2/20. And then I'm going to drag this guy over here and spread it out a little bit. There we go. Now I got my expected move taking up just about the whole screen. I'm going to go to set slices. And you know, just double check here. No, I didn't do it again. There's my mouse. And I'm going to just pop off the screen for a second here. Make sure that good. All right. Little technical difficulties here. All right, cool. So I want to go back and I want to set my slices to break even at expiration. With this trade, it looks like we're looking at an actual better than 50% probability of profiting on this one. Yay. Right? You don't see that often in our debit spreads. But let's take a look at the slight modification of doing the 180, 185. Yeah. And then let's move our slices to break even on that one. So this would be a lower probability of profit on this one. So if I want to go back to the original strikes that we saw in the email and say this would be the option if we were going to go with a bullish trade on Disney. So let me uncheck this one. Let's go back and try building an equivalent bearish. There it is. There's the word I'm looking for, a bearish trade, right? So I guess an equivalent would be this one here. And then I'm going to, nope, hang on, buy on this one. I want to buy and I want to sell this guy here. All right, let's take a look at this. This is a bearish position on this one. Looking to pay $2.95 for this one versus paying $2.60. So this is a bit more of a expensive trade for you. So we're going to go ahead and set this to break even. So slightly better probabilities on this one. And let's take a look at the P50s, because those are statistics I like to get from Tastyworks. So I'm going to pop back over to Tastyworks. I'll make it so it's bigger for you. So we can see that this trade here sets up with a P50 of 65% for the bullish trade. So let's clear that off. And then let's take a look at the 180, 175. Is that what we have built in the other one? We have a long 185, short 180. Bring that down there. So that's the trade that we have here inside of ThinkOrSwim. We're just looking at it now. P50 of 62%. So what if we just go like that? Yeah. 180, 175. Let's try that one. There we go. All right. So I am myself a little bit more bearish feeling on this one. So you know what I'm going to do? Here's what I think I'm going to do. I'm going to set myself up just for practice because this is option theory, because we want to test things out. Let's just see. You know, I'm okay with this. So what I'm going to do is actually put one trade on in my margin account and one trade on in my IRA account and see which one wins, right? See which horse wins the race. And you know what? You can't have both because there is sometimes two-sided action, right? So let's go ahead and I'm going to put this trade on. This is going to go into confirm and send mode here. We're going to look at the bullish trade here is going to go into my margin account. I'm going to hit send on that one. Review my max profit of 240 with a 65% chance of taking off 120 of those dollars in the next 43 days. I'm going to hit send. That's going to go to that one. And I'm going to go down to this one, right click this one, confirm and send. See that I can risk $233 to make $267 with a 60-something, 62%, I think it was. And you're not even seeing what's on my screen because I'm bad at this. There it is. I apologize for that. You're staring at my screen and I'm talking about something else. So I should probably redo that. Let's go back and well, at least I'll show you. This is the trade that I now have in working for the margin account. and I want to go back to my Analyze tab. This is the trade I'm going to put in the IRA account. I'm going to right click it, choose Confirm and Send, and I want to change it from margin to IRA. I'm going to go ahead and put a send on that one, and now I have two opposite trades. We'll see which one wins. All right. Sorry for the difficulties in tech today. You'd think I'd be better at this by now. But yeah, always working, trying to get better at everything, whether it's trading or, making YouTube videos. So if you've made it to this far into the video, I do owe you something. I owe you this, a big thumbs up. And one of these days, I'm going to go look for a little graphic, maybe a little sound effect that I can make happen at this moment, because you guys deserve it. And, it's not that hard to do. I'm sure I can find it. So until I see you in tomorrow's cherry bomb trade, happy trading, everybody.